The also popular media topic of housing affordability. Many of you may be wondering exactly what it is, how it came about, is it affecting you? And in this video, we're going to cover a way that if it is affecting you, you may want to consider taking to overcome this obstacle. We're going to cover in this video. This is JP from Blueprint for Prosperity, helping you to increase your net worth through relationship banking, maximizing your borrowing capacity, proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity. So, housing affordability. What exactly is this crisis that has been promoted through the financial media and even the mainstream media in the last couple years or so? In short, it's basically where there's a large pool of new buyers in the housing market, and pricing on real estate is out of the majority of their ranges. So basically, as to say that homes are too expensive for the new wave of buyers that have hit the housing market in the last couple of years or so. And one of the fundamental reasons as to how this has come about is an inventory shortage. Basically meaning that we have underbuilt in this country on residential properties in particular for over the last 10 years, particularly since the 2008-2009 crisis. We have not built a sufficient number of homes to keep up with the demand that is now in the marketplace. I hope this is making sense so far. So with that basically being understood, that is basically saying a basic supply and demand issue, basic economics 101. There's too many buyers and not enough properties. So those who have it are bidding these properties up because at the end of the day now, the sellers, there has been their market for a period of time since you can maybe say since the 2020 pandemic situation or shortly thereafter. It has been an absolute bidding war because a lot of people became eligible for homes when interest rates were dropped by the Federal Reserve in order to protect the economy that they thought was going to go to a complete shutdown due to COVID. So this has been a domino effect, a chain of events that have taken place since 2020, where again, the Federal Reserve felt the need and the federal government felt the need to stimulate the economy. And the Federal Reserve did that by dropping interest rates. They dropped it so low that a lot of people who normally weren't eligible for homes or weren't eligible for as much property, basically their affordability, that is shot through the roof. And you had, what might be a certain pool of buyers expand to essentially a much larger pool of buyers with no increase in inventory to match it. Thus, we have the pricing that we have today in many markets, which is up 30 to 40% since, just since 2020. And even with interest rates compressing from the Federal Reserve in the last year, it has not really put a dent in housing prices in many markets. Few exceptions like Austin, Texas, New Orleans, Louisiana, just a couple markets where there's actually been some price declines notable to speak of. But many markets have jetted up in the last 2 to 3 years and have not come back down. And one of the major reasons, again, is because there's an inventory shortage and still a pretty decent pool of buyers, even with affordability down. So more what this video is about is what option may be on the table for many of you that could circumvent or get around this affordability crisis and this inventory shortage problem. Well, this is going to be a little different for many of you, but I'm going to propose it to help get the wheels turning for you and problem solving for this issue. And that is functioning like a real estate investor. That's right. You may no longer be able to shop for homes as a retail buyer anymore for the foreseeable future. We cannot build enough homes in a short window of time that many of you may be in the housing market right now. It takes years to catch up on millions of homes of inventory. We could be looking at 7 to 10 years or more of consistent building, which hasn't really started yet, by the way, before we can have enough inventory in the market. And that's assuming that the demand doesn't increase. We don't know what it's going to look like in 10 years. We can have millions more buyers and keep us in an infinite pool of inventory shortage, if that makes sense. That can make the situation perpetuate itself. You may have to start shopping for homes as a real estate investor. So you may be looking at the screen thinking, what does that look like? Well, what that looks like is you may have to start considering off-market properties. You may have to consider not only the retail market, the for sale by owner market. But you may have to start considering off-market properties and distressed seller properties. This is the world of the real estate investor. Typically what happens in this scenario is nowadays with the data that's out there, your real estate investors are either using, mailers. In many cases, there are expensive softwares that are out there that allow people to, do data research on homeowners, people who might potentially be behind on their mortgages, on payments, pre-foreclosure phases, whatever the case may be. These data point indicators that somebody may be struggling to keep ownership of their property. Most of the time, what they do from that point on is either mail to them if they have another direct contact, through skip tracing and things of that nature. I'm not saying you necessarily have to get that deep into that rabbit hole, but my point is that you may have to start looking in other ponds for fish. Basically saying the retail market could be DOA at the moment. It could be dead on arrival for you as a home buyer. And so pending your market and the circumstances, you may have to start looking at pre-foreclosure, foreclosures, REOs, bank-owned properties, tax lien, tax delinquent, going to you're contacting your county and getting in touch and finding out how to get a list of tax delinquent properties. These are indicators of people who are struggling to pay their bills on their home or struggling financially and maybe in a situation where they're going to lose their home, and a buyer will be a save for them. So they're going to sell that property at a discount, most likely, and you're going to be able to get them from underneath a foreclosure or a tax lien foreclosure or whatever the case may be. So it could be somewhat of a win-win for both parties. But the moral of this video is to get you to start thinking outside of the box as a home buyer, somebody shopping in this market. You have to be realistic with yourself and understand that this market we're in is not going anywhere for the foreseeable future. The next 1, 2, 3, 4 years, this is what it's going to look like from an inventory perspective and probably affordability. I shot a video recently explaining that projections are showing that affordability from a pricing point of view is not about to change. If anything, homes are about to start appreciating again soon. And that's not even including if the Federal Reserve cuts its interest rates anytime in 2023 or early 2024. This also can springboard the housing market again, because now you're going to have, again, another large pool of buyers that can now afford homes again, bidding prices back up. So if you want to start giving yourself a real opportunity, you're going to have to do some additional legwork, and you're going to have to start digging through resources more like a real estate investor and finding these off-market or distressed properties, riding through neighborhoods. They call it driving for dollars, where you ride through neighborhoods. In your case, you ride through neighborhoods of interest. You find properties, and you may find properties you're attracted to, or you may find properties that need a little work or have some kind of indicator that they're not occupied, that they're vacant. You do your research through the county, or you may go out on a limb and buy a software that'll help you, contact the owners, do mailers. You're going to have to get creative and put a little work in. And it's funny to say, and it may be something that sounds foreign to you, but my goal on this channel, again, is to try to bring you the economic and financial data, bring you the guidance, and help get your wheels turning, to get you in motion and keep you in motion. If you're looking to buy a home in this market, the retail market may be out of the question for many of you in the next coming years, and you need to get creative. I wanted to bring this video to you, as I said, to get the wheels turning, because I know it will be valuable for you, just to get you thinking. Do your research. Drop some comments down below on what you think about this predicament we're in the United States in the housing market, how you're dealing with it. Are you a first-time buyer, a move-up buyer? Talk about your scenario so we can educate each other in the comment section below. And as always, I appreciate y'all joining. Stay focused. Stay in motion. I'll see y'all soon.